Hey everyone, welcome back to Corporate Decoder, the place where we decode the financial secrets of the business world so you don't have to. And today we are diving deep into British American Tobacco p.l.c, or BAT as they are more commonly known, their annual report for 2025. So buckle up because we're about to see how this tobacco giant is navigating a world that wants them to build a better tomorrow, which apparently means fewer cigarettes and more smokeless options. So the big question, does their business match their message? And importantly, are they still a good investment? Let's find out. So BAT is a massive company with operations across 150 markets. They sell over 465 billion cigarette sticks and 12 billion other tobacco product equivalents in 2025 alone. That is a lot of tobacco products, to put it lightly, but they are also pushing hard into what they call new categories. These are things like vapor products, heated products, and modern oral products. Like Velo revenue from these new categories is growing faster. A massive 47.4% to over £1.1 billion in 2025, primarily driven by Velo's success, especially in the US where it is now the second biggest brand by volume and value. Now let's talk about the money. BAT's reported revenue actually decreased by 1.0% to about £25.6 billion. What happened? Well, a big reason is the currency exchange rates. Specifically, a stronger pound in the UK versus other currencies actually made their overseas earnings look smaller when translated back into pounds. But if we ignore that currency fluctuation, their revenue actually grew by a healthy 2.1% on what they call constant rates, which is a better way to look at the underlying business performance. The US market is crucial for BAT revenue. There jumped 2.3% to over £11.5 billion. Even with currency affecting things by ignoring currency, that is a 5.5% increase. This growth was fueled by combustibles, which saw strong price increases, and importantly, the Velo Plus launch in the modern oral category, which was up a staggering 297%. This more than made up for lower cigarette volumes and a dip in vapor sales. In their Americas and Europe region, or AME, revenue was up 0.7% or 3.3% ignoring currency. That growth was led by combustibles pricing and a solid 18.3% jump in modern oral products. Modern oral in this region is doing really well, contributing to new categories revenue growth of 4.8%. However, their Asia Pacific, Middle East and Africa region, or APMEA, saw a big drop in revenue, down 10.9% or 7.2% ignoring currency. This was mainly due to tough regulations and tax challenges in places like Australia and Bangladesh. But there was some good news from Pakistan, Nigeria and Indonesia, which partly offset the decline. Now let's look at profit before anyone. Off adjustments or currency effects, BAT's profit from operations actually went down 2.7% to about £11.6 billion. This might sound bad, but remember, some big charges in the previous year did not repeat. For instance, the Canadian litigation settlement, which was a massive £6.2 billion charge in 2024, was actually a credit of £708 million in 2025 thanks to updated forecasts. This significantly reduced their reported profit number a lot. Stripping out those off items and currency effects, their adjusted profit from operations increased by a slight 0.4% on constant rates, but they faced about £315 million in higher costs due to inflation, mainly from leaf prices and manufacturing expenses. Luckily, efficiency initiatives helped save them £327 million in 2025, so they largely offset those cost increases. The US region showed good growth in adjusted profit, up 5.9%, while AME was up 1.7% APMEA. However, saw a significant drop of almost 18% due to the revenue challenges we talked about earlier. Okay, let's circle back to Vapor Products Views, which is their global vapor brand, is facing serious headwinds. In the US, volumes dropped 8.8% due to the continued rise of illegal single-use vapor products. But there is some good news. The FDA is cracking down on these illicit products, which is helping the legal market, and Views actually return to revenue growth in the second half of 2025. This is a really positive sign. They maintained their market leadership in value share to keeping it above 51%. Modern oral products, with Velo leading the charge, is a real bright spot. Revenue in this category soared 47.4% to over £1.1 billion, driven by the successful nationwide launch of Velo Plus in the US. This growth put Velo in second place for both volume and value share in the category. They are also launching new innovations like Velo Shift and seeing success with Grizzly nicotine pouches, expanding their reach. Now, for the traditional business combustibles, volumes were down 7.7%, which is quite a bit, but their price and mix strategy, including what they call excise duty drawback, did help revenue grow by 1.4% or 4.6% ignoring currency. The US combustible market is getting tough, with more consumers switching to alternative products and people trading down to cheaper brands due to cost of living pressures, they did lose a bit of volume share, but gained value share, so they are getting more money for what they do sell. Profit from operations showed a huge jump of 265% to nearly £5 billion. But this is heavily influenced by those lower adjusting items we saw earlier, excluding those one-off items, and currency effects. Their adjusted profit from operations actually dropped by 0.4% on a constant currency basis, which is a bit concerning, especially with inflation hitting their product costs by almost 6%. The regional performance was mixed. US and AMI saw growth, but APMEA was down significantly. Looking at the balance sheet, their total equity available to owners of the parent is around £46 billion, down from the previous year, partly due to the dividend payments and share buybacks. They also have perpetual hybrid bonds treated as equity, which added about £1.9 billion. Total borrowings decreased to about £35 billion from over £36 billion. The previous year this was influenced by currency movements, but also by repaying some bonds and refinancing their credit facilities. They are also focusing on managing their debt maturity profile to spread out repayments, which is good for stability. Now, for the risks, BAT is really worried about illicit trade counterfeits and smuggled products. This is a growing threat, especially with higher taxes and economic downturns. It hurts their brand and reduces their profits. They are also heavily regulated, with many markets banning certain product categories, ingredients, and marketing practices. The FDA's actions on menthol cigarettes and nicotine levels are particularly concerning for them. Another big risk is not being able to keep up with demand for their new categories products. The supply chain is complex and relies on many factors like suppliers being able to scale up and maintaining product quality. They have also faced product recalls and regulatory bans in the past. The company is heavily reliant on the success of these new products to drive future growth. And if they fail to deliver, it could really hurt their financial condition. Supply chain disruptions are a constant headache for them. From cyber attacks to global health crises and political instability, things can go wrong. And it seems like these disruptions are becoming more frequent, especially with the new categories products requiring more complex supply chains. Let's talk about executive Pay Taidu Morocco. The CEO earned around £6.6 million in 2025. This includes his salary, a short-term incentive award, and a long-term incentive award, which is tied to stretching targets aligned with their long-haul strategy. Soraya Benchik, who stepped down in August. Youth 2025 earned around £1.8 million for the part of the year she served. Their short-term incentive plan for 2025 had a strong focus on revenue growth, profit, and cash generation. They hit the maximum payout for revenue growth and cash generation, but fell short on new categories revenue growth for the STI payout. But they did really well on sustainability targets, reducing their greenhouse gas emissions by nearly 47% compared to 2020 levels. That is impressive. For the long-term incentive plan focused on stretching targets from 2023 to 2025, performance was mixed. They did well on cash flow conversion and total shareholder return, but didn't quite hit the marks for adjusted earnings. Per S-Hair and revenue growth, this highlights how challenging it is to predict consumer shifts, especially with things like illicit vapor products impacting their numbers. They had a decent overall vesting of 37.6%. Looking at the financial statements, their total comprehensive income for the year was a positive £4.4 billion, a big recovery from the loss in 2023, and up from £3.1 billion in 2024. A lot of this is due to currency translation differences affecting their other comprehensive income. The key is that their profit for the year attributable to owners of the parent was £7.76 billion, which is a huge jump from the previous years. Their total assets are around £109 billion, and their total equity is about £48 billion. The company has a solid financial foundation, but they are carrying quite a bit of debt. This isn't unusual for a company of this size and industry, but it is something to keep an eye on, especially with rising interest rates. BAT faces a complex and evolving regulatory landscape. Not only are traditional tobacco products facing stricter rules like plain packaging and flavor bans, but new categories products are also under heavy scrutiny. Regulators are trying to figure out the best way to handle these new products, leading to a patchwork of rules. Across different countries, this lack of consistency creates uncertainty and challenges for their business model. When it comes to their brands, BAT has some hefty intangible assets on their books, especially those trademarks acquired with Reynolds American. These are valued at over £37 billion in 2025. They are really focusing on brands like Newport Camel, Natural American Spirit, and Grizzly as strategic growth drivers. Especially in the US market, the success of these brands is key to their financial health, and they are actively managing their portfolios to adapt to changing consumer trends. The Canadian litigation settlement remains a major factor. In 2025, they actually got a credit of over £700 million due to updated forecasts for the industry, which reduced their provision. This is a big change from 2024 where they had a charge of over £6 billion. However, they still have goodwill impairment charges mainly in Canada, Peru and Malaysia reflecting tough market conditions. So what is my take on BAT? On one hand, they are truly a global giant with a strong presence in tobacco and a serious push into new categories. Their investment in innovation like Vuse and Velo is smart, but the success of vapor is being hampered by illicit competition and regulatory hurdles. Modern Oral is a clear bright spot and their commitment to sustainability with things like reducing emissions is commendable. However, the sheer weight of regulatory risks, litigation, and the constant need to adapt to changing consumer behaviour, especially with younger generations, are significant challenges. On the financial side, their revenue is stable, but growth is challenged by currency and market dynamics, their adjusted profit from operations and earnings. Per-share shows some pressure. They are managing debt well, but the rising cost of borrowing could be a headwind. The split in revenue between combustibles and new categories is shifting slowly, but combustibles still drive the bulk of their profits. Ultimately, BAT is a company in transition. They are trying to move away from traditional cigarettes, but that transition faces many obstacles. They are a resilient company with a long history of navigating complex markets, but the regulatory and competitive landscape, especially in new categories, is a tightrope walk. What is your take on BAT's latest results and their future prospects? Drop your thoughts in the comments below. If you found this insight helpful, please hit that like button and subscribe to Corporate Decoder for more deep dives into company filings and financial news. Also, come join our community on Discord linked in the description to keep the conversation going. Thanks for watching and we will see you in the next one.